Okay, I think we can begin. So thanks again, everyone, for joining RPRA and BDO Canada for our webinar, where we'll be reviewing and asking for your feedback on the draft Hazardous and Special Products Resource Recovery Performance Audit Procedure. My name is Michelle Hoover, and I am one of the communications advisors at RPRA and will be your moderator for today's webinar. Next slide, please. So we'll be asking consultation questions throughout the webinar to gain your feedback and what we're proposing in the procedure. To provide feedback to us or to ask a question, click on the Q&A tab at the bottom of your screen, type in your question and click send. There's also an upvote feature that allows you to bump up someone else's question to the top of our queue. And this is helpful if you want to ask the same question or if you want to hear the answer. And if you're experiencing any technical issues, you can let us know by using the chat function, and we'll do our best to support you. We have also enabled the closed captions feature that transcribes speech to text on your screen. And this webinar is being recorded and will be added to our website along with the presentation slides, so you can go back and reference it. And then on that note, I will hand it over to Ellen White, who is our Manager of Compliance and Strategy.
Thank you, Michelle, and thank you to all of you for joining us this afternoon. As Michelle stated, we're here to talk about the draft performance audit procedure for hazardous and special products. If you were able to join us earlier in the week, we did sessions on batteries as well as electronics. So that's IT, TV, and lighting. So if you are interested in what we talked about in the previous sessions, you can go to our website and watch those recordings. But today we're here to talk about hazardous and special products. The procedure that we are discussing today, this is going to be referenced by producers or pros operating on their behalf to when they're reporting their activities. Now, we've put here that this would be used during the 2024 reporting period. In our previous sessions, we received significant feedback from our registrants highlighting the challenges with implementing a procedure in a tight timeline to when it was finalized. So we are cognizant of that. And so we will be communicating as we release the final procedure, we will be communicating what those timelines are for implementation. We recognize that 2024 may be a tight timeline. Peter from BDO is going to walk us through a detailed timeline of how this draft procedure was developed. But in short, I'll say that it was a phased approach, with phase one taking place earlier in the year between March and April. At that time, we did invite registrants to attend group and one-on-one interview sessions with BDO. We do recognize that not everyone was able to participate in those sessions. And so the draft that we've developed here from that feedback is very much a draft. And we look forward to the feedback that you provide to us today using the Q&A button, as Michelle explained, or through writing, and we'll accept written submissions until December 14th. So with that, I'm going to pass it over to Peter from BDO to take us through the rest of the presentation.
Thank you, Ellen. So for those I didn't get a chance to meet in the first phase of the consultation, my name is Peter Hearn, and I'm a senior manager in BDO's risk advisory team based out of Toronto. This is the agenda for today's presentation. So we'll start out, as Ellen said, going over the consultation timeline and next steps after this presentation. There's a short piece on the feedback we received during phase one. And then the bulk of the presentation will be a review of the proposed draft procedures. And then lastly, there'll be a couple of slides on how you can submit feedback after this presentation. But of course, feedback and questions are welcome throughout in the question and answer box. So the consultation started. We independently performed some research. We looked at what similar jurisdictions might be doing, whether in Canada or elsewhere in the world. We reviewed material that had previously been provided to RPRA, specifically the RER reports, which some processes had already submitted, so we could understand some of the processes that are occurring within the province for these types of materials. Then we had the one-on-one and group consultations with processors and pros, as well as engaging with the industry stakeholders that we were able to contact. And then the next several months was the drafting of the procedures. So taking into account feedback that we got during phase one, and then regular feedback from RPRA as we iteratively reviewed and then developed further the procedures. And now we are at this point where the draft procedures have been posted to RPRA's website, and then we are presenting them to you today. So the next steps after this will be reviewing the feedback that will be submitted, as well as anything said during this call. And then we'll make changes to the draft procedures if necessary. We will prepare a consultation report which summarizes the feedback, as well as anything that we've taken into account, if we have taken it into account, or why we haven't taken it into account. And then the final procedures will be posted along with the consultation report on RPRA's website early next year, with the performance audits taking place in 2024. So the main feedback we received is laid out here. We were told that in many cases it's very difficult for processors and pros to get cooperation of downstream processors in order to provide the evidence that an auditor would need. Processors didn't want to be penalized for downstream process performance, or if a downstream processor wasn't able to provide the necessary information, a primary processor didn't want to be penalized for that. We understand, obviously, that processors can operate in many different ways. I mean, particularly for HSP, there's also many different products within this category. So there's many different ways that they could be processed into a recovered resource. So it wouldn't be possible to produce a one-size-fits-all procedure. We, of course, want to balance the admin and financial burden with the results for RPRA, other stakeholders, and the public at wide. We were asked if we could try to align the RER procedure, which Dylan would have presented a couple of weeks ago, with this resource recovery performance audit procedure as much as possible. So all of these points were taken into account in various ways. Some of them are not necessarily within the scope of drafting an audit procedure, and some of them aren't possible based on kind of the regulation that's in place, as well as accounting standards. And we'll go into details where as we present, we'll kind of bring up the times where we have tried to incorporate some of this feedback. So this is a summary of the sections of the procedure document. So this, the resource recovery performance audit procedure, specifically applies to producers and pros who are reporting on a producer's behalf. These two parties would be the ones who would have to have the responsibility within the regulation to conduct this audit, or have this audit conducted by an auditor. But it does definitely involve processors. They do have to provide a lot of information that the pros and producers otherwise wouldn't be able to provide. So it's useful for everyone within the system really to have an understanding of these audit procedures. So first off, it's the purpose of the audit procedure, the specific HSP performance reporting criteria as defined in the regulation, then the audit procedure specific definition. So these are definitions that we added above and beyond ones that were already in the procedure, already in the regulation, which we thought would help everyone's understanding. Then it's into the three proposed audits. So the first one would be for primary HSP processors, and that would follow the CSA 3000 accounting standard, and these are suggested audit procedures. The second is downstream HSP processors performance, and that would follow the CSRS 4400 accounting standards, and these are agreed upon procedures. And then lastly, it's the recovery credit transfers. Again, it's an agreed upon procedures type engagement. And lastly are some appendices, which would help auditors or pros or producers understand some of the specific requirements and give guidance on various steps within the procedures. So as I'm sure most of you know, the purpose of this audit procedure is it's defined within the regulations that a producer or a pro on their behalf it shall cause an audit to be undertaken. So the primary process are audit procedures. Those would be audit procedures that would apply to performance by primary processor. This is guidance for producers and pros to prepare for an audit, as well as for auditors to conduct an audit. Whereas the downstream and credit transfer procedures, these are still guidance for the producers and the pros, but they provide specific audit procedures that an auditor would have to undertake to conduct this agreed upon procedure engagement. So this is the first section of the reporting criteria. So this again is defined in regulation, the reporting requirements, so the different sections, and our procedures will cover each of these sections. So category A, B, C, and then next slide, please. Then also the non-recycled aspect of this, as well as confirming whether a HSP producer in the category A have satisfied their management requirement. So these are three definitions that we thought were helpful so everybody's sort of on the same page and helps everyone's understanding with these audit procedures. So firstly, collected means when HSP has been delivered to a registered hauler, refurbisher, or processor. So I think this clarifies that HSP isn't necessarily collected when it is dropped off or sent or delivered to a collection facility. It is only considered delivered when it's picked up by a registered hauler or refurbisher or processor. Downstream processors have been defined as a person that receives recoverable resources that were generated from HSP and collected in Ontario from a HSC processor for the purpose of further processing. So this would be anything that is no longer a hazardous and special product, but it is not considered a recovered resource as defined below. It is somewhere in between. So a processor receiving this type of material somewhere in between either original or fully recovered would be a downstream processor. And when we say recovered resource versus recoverable resource, a recovered resource means a resource derived from HSP that will not have to undergo any further refining and can be used to displace a virgin material in the manufacturing of the new product. Questions?
So our first question, and this is something to think about, you can either provide feedback today or by December 14th. But are there any other definitions that you think need to be included in addition to collected, downstream processor, and recovered resource? So while we wait to see if any questions come in for that, we do have a question about the frequency of this procedure, this audit procedure needing to be submitted to RPRA.
Yeah, so under the regulation, it did set a deadline of actually July of this year, 2023, for the first audit report, and then the next audit report being required in July 2026. As we communicated, because of the timeline of developing this procedure, we did postpone that July 2023 deadline. So we did not require producers or pros to submit the audit in July. And we also delayed our launch of performance reporting for HSP in general to September. So we will take all the feedback that we've received from registrants in terms of the amount of time and effort it would take for them to implement or to conduct the audit with the final procedure and then we'll communicate timelines for the new deadline for that July 2023 audit, as well as how that might affect future years reporting as well.
Thanks, Ellen. That's the only question we have so far, so we can move forward and just remind everyone we're going to be stopping for questions throughout this session.
Okay, so as we sort of touched on, we are proposing 3 separate reports or 3 separate audits. So the first one would be for the primary HSP processes. And as I've previously defined on the previous slide, the difference between primary and downstream. So the primary HSP processes would be included within a CSA 3000 reasonable assurance engagement. So with this engagement type, an auditor provides an opinion. The procedures that we're going to propose and then explain further in the rest of this presentation are guidance for auditors. Due to the nature of the engagement, you cannot define the procedures they have to use. So they may want to use all, some, or none of the procedures we have proposed. So it's not an exhaustive list, and there may be other possible audit procedures they may want to use. For downstream processes, this would be the 4400 agreed upon procedures engagement type. And these are specific procedures. The auditor does not provide opinion. They just perform the procedures and document the results. This would include a section for combining the performance as reported from the primary HSP processes in the 3000 report with the performance of the downstream processes. So it would give a full picture of the pros or producers' entire performance, including primary and downstream processes. And then the last review or audit is another 4400 agreed upon procedures. Again, these procedures are specific. The auditor does not provide an opinion. And these procedures for when a producer or a pro has bought or sold recovery credits, which may be done when a producer in category A has not achieved or exceeded their management requirement. They can choose to purchase or sell credits in order to achieve their management requirement. So part of the rationale of splitting up primary and downstream processes is due to the audit conclusions that are available for a reasonable assurance engagement. So the four here, they go from left to right of being kind of the best possible outcome to the worst possible outcome. So the best possible outcome is an unmodified conclusion where the auditor will conclude that the subject matter has been prepared in all material respects in accordance with the applicable criteria. And this is what many people would call a clean audit opinion. Then we have three modified conclusions. And the first one is a scope limitation. So if the auditor is unable to obtain sufficient evidence for a specific area of the reported figures, they could place a scope limitation, which they would then explain in their audit opinion. So if one processor within a pro or producer system did not or was unable to provide sufficient evidence, the auditor could document that. That would be a scope limitation, and they would still be able to provide an opinion on the remainder of the performance by other processors within the system who were able to provide the necessary information. The only way that this can kind of work, that it's just a scope limitation, is if the limitations are not so material and pervasive that they would require one of the conclusions to the right. So if it is determined that by the auditor that the scope limitation is wider, is material, it is pervasive, it's not restricted to specific areas, and they're not able to obtain the sufficient evidence to form a conclusion, then this would be a disclaimer of conclusion. And then the final option is an adverse conclusion, which is the worst possible outcome. And this is where the auditor has judged that the subject matter is materially misstated. So this is where it's not that they haven't been able to obtain evidence, they have been able to obtain evidence, and that evidence has made them conclude that the information is materially misstated. And so we'll go into rationale more further in a few more steps, but part of remembering that of the different outcomes is part of the reason why we're suggesting this split. Okay, so then the audit procedures itself. So for the CSA 3000 for primary processes, we have the suggested procedures split out by the different reporting requirements within the regulation. So category A recovered resources, category B and C are separate. Processing and reuse, non-recycled, and then the confirmation of the management requirement for category A. Then we have various appendices, which some of which we'll go into detail in future slides. So the first step-by-step audit procedures. So at a high level, these proposed procedures, suggested procedures, suggest data analytics, sample testing, review of various pieces of documentation to confirm that transfers between the various parties have occurred, review of a processor's mass balance, which we'll go into in quite a bit more detail further on, and recalculation of numbers which the producer or the pro have reported. This is an example of one of those detailed procedures. So this would be for recovered resources for HSP in category A. The auditor was suggesting the auditor would obtain a listing of all the transactions that have collected and delivered, obtain a listing of all the recovered resources, recalculate these totals, and then compare these totals to the pro or producer's annual report, which is the information they would be reporting to RPRA, which should match the totals on these listings. Next slide, please. Then for each HSP processor within that category, for the pro or producer, they would require to, or we're suggesting that they would select samples of inbound shipments and then check the accuracy, completeness, and validity of those. Select samples of outbound shipments, same thing. It's the accuracy and validity of those transfers to RPMs and markets or subsequent processes, confirming that they're using the material in the manner that it is intended, and agreeing the weight of the outbound resources to any support that's available, for example, weigh scale tickets. And then again, for each processor, we're suggesting the auditors might want to obtain a mass balance and use that mass balance to validate the numbers that have been reported by a specific processor. They would use the mass balance to identify and recalculate the percentage of processed material for that processor, and then compare it to the reported amounts for that processor. So validating HSP, and this is one of the appendices. So there's 3 specific criteria that HSP must meet, and these are defined in the regulation. So it meets the HSP regulation definition. It was used in Ontario, and it was collected in compliance with the regulation, as well as transferred by a registered hauler and processed by a registered processor. Another appendix is to do with validating the calculated weight of HSP. So typically the actual weight will be used, and then in those cases it would require some sort of support. So typically that would be a weigh scale ticket, which could be clearly matched to a bill of lading or an invoice or that type of document. So the auditor could understand specifically what the weight was for that transaction. But there are also weight-based conversion factors. So in some cases, RPRA have provided these conversion factors for specific products to say that on average it would weigh this amount, and a pro or a producer is able to use those weight conversion factors rather than actual weights. And in those cases, an auditor want to ensure that the correct conversion factor was used and that the multiplication was accurate. Auditors will be looking at available supporting documentation for transfers between parties. So they'll be looking at hard or soft copy. If actual weight is available, then it would be a weigh scale ticket to support that. Ideally, supporting documentation is acknowledged by both parties, or there are 2 documents, one from one party, one from the other, that can be compared and reconciled to confirm that the transaction or transfer has taken place.
So our next questions are, how does your organization record and store transactions and supporting documentation? Do the records and supporting documentation meet these expectations? And would this information be readily available and accessible to your auditors? So we do have some questions and some feedback. So the first piece of feedback, we thank you for submitting it. It goes back to the definitions, and it's about for the definition of collected, for us to specify primary processor in that definition rather than just processor. And then our first question is if we can, Peter, if we can list out the qualifications of an auditor.
So I believe the qualification of the auditor is defined in the regulation. Ellen, you may want to jump in.
Yeah, I pulled it out quickly. So it's in section 57(3) of the HSP regulation, and it says that the audit must be conducted by an independent auditor who is licensed or holds a certificate of authorization under the Public Accounting Act of 2004, and in accordance with the procedures set out in our audit procedure.
Thanks, Ellen. Next question is, where there are multiple companies processing HSP materials, is an audit required for each company?
No. So for a producer or a pro who has multiple processes working within their system, that producer or pro would have one CSA 3000 audit, and that can include multiple primary processes. The processes report the information to the pro, and then the pro would prepare the report of their entire system, and the auditor would audit that report. If there's also downstream processes in the system, this is where the second downstream processor agreed upon procedures report would come into play. Again, this would just be one report. So if there was multiple downstream processes, each process would have a section within that report where the auditor would perform the agreed upon procedures. And then lastly would be the credit transfer audit, which would be, again, that's just a single report, and it only is required to be done when a pro or producer chooses to transfer credits.
Thanks, Peter. We have another question that we might have to get back to this individual, but they're asking if during phase one, if we engaged with stakeholders from every material category. I don't know if we have that list available now, but that is probably something we can provide. They're looking specifically for refillable and non-refillable pressurized container stakeholders. So we can provide a list after the session directly. Then we have
sorry, I'll just jump in to say, but if there is specific any feedback from this material group that you feel that the procedure doesn't reflect practices, I know especially with refillable cylinders, the question of what counts as processing versus reuse has come up before. So please provide any feedback of where you feel we can provide more clarity in our procedures.
Then we have some more feedback that we'll take into consideration, and we thank you for submitting it. It's about asking if we would consider exempting HSP materials where they collect less than 1,000 kilograms annually, and if we would exempt them from these procedures. So that's something we'll take as feedback, and again, thank you for sharing that with us. We have another question. Does testing have to be done? And if so, separate sets of samples tested for each material type?
So we're suggesting that an auditor would want to select separate samples for each of the processes within their system, within the pro or producer system that they're auditing. So if there were, as an example, and again, this is down to the decision of the specific auditor that you hire for the work, but they would select an inbound sample and an outbound sample for each of those processes. And if there are over 500 inbound transactions and outbound transactions, there would be 60 inbound and 60 outbound. So potentially there is a large volume of samples if there are multiple producers and significant volume of transactions.
Thanks, Peter. Next question is, does the auditor provide an opinion or are they providing something else?
So for the reasonable assurance CSA 3000 report, which would be the one on primary processes, the auditor is providing an opinion. And for the other two CSRS 4400 agreed upon procedures engagements, the auditor is not providing an opinion. They are just documenting the results of the specific procedures.
Thank you. Then we have one more question about your previous response about multiple audits. So are we to understand, so is the producer or pro to understand that the audit will be completed based on information the pro would have received from their contracted processors and not by gathering information directly from the processors? Is there an expectation that pros are collecting certain information already, or that pros will collect additional information from their processors to enable the audit?
So this is partly a business decision. The auditor is not envisaged that they would be reaching out directly to processors to obtain the information they need to support the pro or the producer's audit. The pro or producer can either choose to proactively obtain what they think is all the information they need over the course of the audit period, as it happens on a monthly basis, for example, or they can choose to wait until the auditor selects their samples, for example, or ask for the listings or ask for whatever supporting documentation they would like, pass that request onto the processor, and they would just be a little bit of a chain between the auditor asking for that information to the pro or producer and passing it on to the processor. This may be an easier option if there's thousands of transactions. You're just getting the documentation for the specific one you need, but it does also open a little bit of risk in that if a pro does not necessarily know what they can expect to receive from a processor, then when it comes time to audit, they may soon realize that what they need is not available. But again, this would be down to the individual auditor's discretion. If they did agree to go directly to a processor to obtain the information, to kind of cut out the middleman, if you will, that would be completely up to them.
Thank you. We don't have any other questions, so I'd say let's move forward.
Okay, so another appendix, validating the outbound shipments. So auditors would possibly be looking at the available supporting documentation for the material sales to either downstream processors, RPMs, or end markets. They're really looking for sales invoices, shipping documentation, bills of ladings, as well as possibly evidence of payments within either the sellers or purchasers' bank statement. Validating the actual use. So auditors may want to corroborate that the sale of the recovered resources is going to be used as intended under the regulation. So procedures could include contacting that company, checking on that company's website, or in maybe an extreme case, visiting the company to ensure they are using that type of material as they say they would be using it. A question sort of to consider would be, does the cost of the transportation or the cost of material logically suggest that it's going to be used? So if somebody pays $1,000 for something, it's very unlikely they're then going to landfill that material, for example.
Our next two questions are, what processes or controls do processors already have in place to validate RPMs and end markets? Do pros require this type of evidence when they contract with a processor or pay for processed material? So we don't have any questions. Again, if you do, please feel free to submit them and we'll ask them out loud at the next. Oh, we just got one. Okay. Can a pro engage with the same audit firm or auditor for its HSP performance audit if that same firm is also performing an audit for the HSP supply report? of some of its producer clients. So is there a conflict of interest there?
Ellen, if you want to answer first, and then maybe I can give another answer.
Yeah, I don't see an inherent conflict in this, but I'll let Peter weigh in as well. As long as the auditor is I'll leave it to Peter to talk about the role of an auditor here. But no, and again, given the limited space that a lot of audit firms operate in this field, we wouldn't see it as an inherent conflict to have the same audit firm doing both.
Yes, I think that was the answer I was expecting. That in RPRA's opinion, it's not a conflict, but as sort of Helen suggested, it really is down to a specific audit firm whether they would personally consider a conflict, but approaching them to do both or would not necessarily be a bad idea.
Thank you. We don't have any other questions right now.
Okay, so validating the mass balance. So the mass balance is probably a lot of you will fully understand this as processors. It would be it's a suggested method for validating the weight of the recovered resources reported by a processor. So on the screen here is a very simplified mass balance, which ultimately is saying that what goes into a processing facility must come out of a processing facility, taking into account a fraction of shrinkage or wastage. So typically, if a processor's mass balance demonstrated they had a recovery rate of 50%, then the processor would report, for example, 100,000 kilos of collected or inbound material. They would then report 50,000 kilos of recovered resources for that pro. If a processor reported a higher weight, so for example, they collected or received 100,000 and then they stated that they recovered 70,000, then an auditor may want to understand how that was possible. So the auditor would compare what was reported to their on average mass balance for an entire year, and they may want to understand how they were able to recover more resources for this specific pro than they have for kind of the average feedstock that they'd receive. And of course, there is cases where there may be a difference. For example, if the feedstock that a pro is providing to a processor is of a higher grade to the average feedstock that they receive, then they may be able to achieve a higher recovery rate. And it would be down to the specific auditor to determine whether kind of that explanation was sufficient and if further procedures needed to be applied to validate the difference between the average and what was reported. So this is a case where the mass balance is different to the mass balance that Dylan would have proposed and presented in the RER calculation. And this is because it does not take into account resources recovered by downstream processors. So a lot of the data points that we included in this mass balance, as well as Dylan's mass balance, will be the same. So for example, an opening inventory will be an opening inventory, but there's just sections that we have not included and maybe sections that Dylan have included. So that's like the slight difference, but there should be some overlap in terms of processors shouldn't have to be duplicating too much of this. There should be a lot of similarities. They could provide the same information as they provided for the RER calculation. Okay, so this is the top half of the mass balance calculation. So this portion covers the opening inventory and the inbound product for the calendar year. So a processor will have to have completed an opening inventory count on January 1st, or have previously completed an inventory count, and then have sufficient records to calculate what that inventory would be on January 1st. So if they completed an inventory count sometime in November, and they had sufficient documentation of the ins and outs for that period, November to January, then you could extrapolate what the inventory would be on January 1st. And if you, of course, have any comments on whether there should be other line items within this mass balance calculation, then would definitely like to hear them and potentially include them. Next slide, please. So the next slide is the recovered and non-recovered material. So the top bit is the recovered material sent to an end market. So we've included reuse here, but also split up the various materials that could be considered recovered. Then there is materials that are non-recycled, so they could go to the 4 different use types that are not considered to be recycled as listed there. Then, of course, there is non-program material that would be sent to an end market. So, for example, if there is garbage within the collected material, that is not a program material. It needs to be calculated and excluded separately, and it would need to go to a separate end market, but it wouldn't count as program material that's being disposed of. And then also there's product transfer to other processes. So this could include where it's non-processed product that perhaps the processing facility doesn't have capacity to process at that time, sends it somewhere else, or it could be semi-processed material that they would then be sending to a downstream processor. And this section is the closing inventory. So similar to the prior slide 2 slides ago, this would be the opposite. So a closing inventory would have to take place at the end of the year. Of course, this could be the same count, December 31st, January 1st. It could be the same opening closing for the following year. These would be looking at the closing product inventory, the materials, the semi-processed materials, and any non-program material, and combine that for a total closing inventory volume. And then this section is where the mass balance and performance rate calculation is performed. So the mass balance calculation, as I mentioned before, if the mass balances taking into account a small proportion of shrinkage and wastage, then this indicates that the figures that have been reported by a processor is accurate because what goes in must come out. Once we determine that this is accurate, then they can calculate the performance rate. So for the purposes of this performance rate, the recycled material is only the recovered material sent to an end market to be used in the making of products and packaging, and it excludes reuse and refurbished products if that was possible. And then the available material is only recycled material and program material sent to an end market. So this really strips out all the other variables and really focuses on what is recovered versus what was able to be recovered to give quite a simplified performance rate calculation.
So we'll pause here for more questions. In the meantime, we do have a few queued up. One of them is asking for clarification on who is responsible for paying for the audit process.
Yeah, I can speak to this one. The regulation and our procedure doesn't speak specifically to who's responsible for paying, but the regulation does state that it's the producer who's responsible to have the audit undertaken. And we know that producers may do that if they're responsible for their own management, or they may work with a pro who's submitting that. So it would be producer or pro.
Thanks, Ellen. Our next question is, if HSP materials can only go to processors that have proven their RER with RPRA, which is based on mass balance, why is the audit protocol also making it necessary to do mass balances again?
So the significant difference between the RER mass balance and the mass balance that we are discussing here is the inclusion of downstream processes. So within the RER calculation, it allows for downstream processors to state their performance. They could state as high as 100%, and that would be included in that processor's RER. For the purposes of this audit procedures, we are excluding anything that the downstream processor does for the primary processor portion. So it needs to be excluded, and it just needs to look at what was the actual recovered resource. So for example, there could be a processing facility that doesn't recover any resource. And all it does is then send it to a semi-processed material to a downstream processor. And that's not a problem. That's not anything negative to that processor. That's just the way that material is processed. Therefore, the performance will not be taken into account in the primary portion. It'll be taken into account into the downstream processor report audit.
The next question is, how is reuse HSP products that are not collected as defined in the procedure count toward performance?
So the definition of collected is when HSP has been delivered to a registered HSP hauler, refurbisher, or processor. So if it has not, then it wouldn't be considered collected. Therefore, it wouldn't count towards the performance. I think RPRA's opinion would be that anyone who receives material should be registered, and therefore this shouldn't be an issue. And there is this time to register these participants.
The next question is about antifreeze. So is there any impact to resource recovery calculation for antifreeze since RPRA has exempted producers from including initial fill antifreeze in their HSP supply reports for the last 2 years?
I can speak to this one, Peter, just to give everyone on the call some background on this one. So yeah, there with initial fill antifreeze, we have been working with producers, vehicle manufacturers, on getting clarification around that definition. And we're still on hold to see if that's going to be an amendment to the regulation. So we'll have to just provide some clarity on in the meantime until we have that any guidance on the reg amendments on how that would apply to your future reporting. So we would provide that we'll have to provide that additional guidance that would exist kind of outside of this procedure, as it is just a particular case.
Our final question is asking how this procedure affects materials like mercury-containing thermostats, where apparently RER cannot be achieved.
So for the purposes of these audits, the RER for a processor facility of any material is not really considered. So as I mentioned, because of the difference between how downstream processes are considered, they're completely different rates. So an RER of processing facility, and then what would be calculated as the performance within this audit would be different numbers. So they wouldn't necessarily have an impact if a process is not able to achieve their RER.
Thanks, Peter. Okay, sorry, there's a few coming in. I'll read through them. I know we're going to stop for questions shortly again, so I'll ask these at that time.
Okay, so now we move on to the draft downstream processor performance procedures and the rationale for why we have proposed this. So the regulation requires a reasonable assurance engagement, which is what we've just covered in the previous slide, the CSA 3000. So this is defined within the regulations. But by excluding downstream processors, this reduces the likelihood of the qualified or adverse opinions for the entire performance system, which would impact the primary processors. These are the opinions that a few slides ago, we laid out the 4 different types of opinions with the with the 2 or 3 to the right-hand side, not the opinions that we would want. So it's expected that this agreed upon procedures report will provide RPRA with more detailed and consistent insight than if the downstream processes were included in the 3000 report and there were just several scope limitations or qualifications or adverse opinions, this proposed method would allow for more insight. So, for example, we'll get into more of the details, but it would be clear what documentation was not available from that downstream processor, what was available, what an auditor was able, specifically the procedures they were able to perform, versus the scope limitation or an adverse opinion wouldn't quite necessarily go into those details. RPRA can choose to investigate processors who report unrealistic performance or don't provide sufficient evidence, and the agreed upon procedures for downstream processors would really highlight, again, like I say, the specifics that weren't available. Next slide, please. So with these downstream procedures, because this is an agreed upon procedures engagement, we have defined what those procedures are. So it's a specific list of reports and documents that an auditor would require from a downstream processor. So a producer or a pro can use this list and can contact downstream processors to advise this is the information that an auditor is, or we're going to be requesting, or an auditor will be requesting at the time of the audit. It leverages the mass balance calculation that we've covered in previous slides. So it uses that validation process of the mass balance and then calculating the downstream process performance, comparing it to the reported weights that they would report. A lot of the procedures are similar to the suggested audit procedures from the 3000. So in terms of requesting listings, recalculating, selecting samples, validating those samples. And then there is a step on combining the performance. So ultimately the performance of primary processors in the 3000 report and downstream processors in the 4400 report would be combined together to provide the entire performance for that pro or producer system. And I think most importantly, the downstream process performance is incorporated regardless of the sufficiency and the appropriateness of the evidence they're able to provide. So for example, if a downstream processor reports that they have received 100,000 kilos and they have processed 100,000 per kilos with 100% recovery rate, but then they do not provide evidence that supports that, the auditor will still include that 100,000 kilos within the pro or producer's reported numbers. They will still combine those together as part of the procedures. But when RPRA receives that report that indicates this downstream processor has received an unlikely 100% recovery rate, and they weren't able to provide any evidence, that would be cause perhaps for RPRA to dig deeper into why they were able to achieve that, why they weren't able to provide support and documentation. It would give the pro and the process producers kind of the information they needed to speak to that downstream process to understand what the issues are. So this is an example of the specific procedures. So as you'll see, it's almost like building up the mass balance that we've discussed previously. So it would be requesting that opening listing, the opening inventory listing, the opening process materials inventory, semi-processed material, non-program materials, and then combining all of those to be the balance, the inbound plus inventory. So this would be done for the other sections as well. So it'd be looking at what the recovered, the non-recovered, and the closing inventory. They all have specific steps just like this. And then it gets to the validation portion. So this is where an auditor would be comparing the what was included in the mass balance and then what was calculated as that downstream processor's recovery rate, and then calculating the difference between what was the imputed recovery rate and the calculated recovery rate within the mass balance. So this would be like the example that I gave earlier of they received 100,000, they processed 50,000, suggests a 50% recovery rate. But if they reported 100,000 and they reported 70,000 performance, which indicates a 70% recovery rate, this would be where an auditor would document the difference, the 20% difference between those two. And then lastly is the combination of the primary and downstream performance, which I mentioned before.
Thanks, Peter. So these are our final questions. And the first one being, do you agree or disagree with the approach of separating primary and downstream processor verification? If you disagree, what do you think would be a more effective approach? And since providing feedback in the initial consultation, so that's phase one, do you think downstream processors are more or less likely to provide sufficient evidence? So we have some questions. I'll just start off. We received some feedback about if RPRA, if we can consider ways to harmonize the dual mass balance processes between our procedures to help reduce the cost. So thank you for submitting that. If you have any suggestions or additional feedback to that, please feel free to submit that to us through consultations@rpra.ca. And then we have a question asking if we could please explain what level of substantiation you require for each data point. An example is for the opening balance or the tons received at a processing facility, is our expectation for pros to be able to provide the tons received at a scale ticket level?
So the expectation would be that a report would be provided from a downstream processor, and if necessary, specific transactions with that report would able to be supported by a weigh scale ticket. So like I sort of mentioned previously, it's not really expected that a pro or a producer would have every single weigh scale ticket for a downstream or a primary processing facility available to them at all times. But when necessary, when an auditor chooses to request that, then they would need to obtain that information to support their audit opinion.
Thanks, Peter. The next question is, are there any decisions on how solvents will be managed since they aren't recycled but are managed through fuel blend?
I don't think I can answer that question.
Yeah, it's good feedback for us. We'll take it away.
And then we have another question. It's specific to paint regarding reuse. So where paint is dropped off at some municipal collection sites, municipalities have the option of offering a half to full cans of paint to their residents. Paint cans taken from paint reuse is tracked. How can these amounts count towards performance reporting?
Well, depending how they're tracked, they can sort of quite easily be included. So if there is reuse, the auditor would request a listing of that reuse of the various transactions that make that up. So in this case, it could be paint cans taken from a municipal collection site. If long as there is weight to support that and evidence to support that transaction did take place, then it would be able to be included within the performance audit.
Thanks, Peter. We don't have any more questions, and sorry if earlier I said this is the last time we're stopping for questions. We will be stopping one more time.
Right, so then lastly, we're on to the agreed upon procedures for recovery credit transfers. So as I mentioned, in order for a producer to achieve their resource recovery obligation, so which applies to category A materials, then a producer or a pro may choose to purchase performance recovery credits. So for the compliance purposes, the HSP recovery credit transfer procedure outlines how to validate these credits. So the performance behind the credits will have already been audited by a pros auditor, the selling pros auditor. And so all the purchasing pro needs to do is validate that that transaction took place. So the auditor will perform some quite simple procedures that are laid out onto the next slide to validate that they did indeed purchase those credits. With given note here that although resource recovery performance audits are only required to be performed every 3 years, it's suggested that a pro who is selling credits may want to perform an audit on an annual basis, because then the purchasing pro and their auditor will be able to use that audit report as comfort that the credits that are being sold have already passed an audit. So these are the suggested audit procedures. So simply it will be obtaining copies of the agreements, confirming both parties, confirm the volumes, the amount of credits that are sold, obtain invoices and evidence of money transfer taking place in the pro's bank statement, agreeing the total weight of the credits to the amount reported on the credit documentation, and then calculating the resource recovery percentage for that pro. So take into account the performance before the credits, add and subtract the credits, and then divide by the process material to calculate the overall resource recovery percentage. Lastly, determine if, based on the calculation, that the pro or producer meets or exceeds their management requirement as defined in the regulation.
We don't have any questions currently, but we encourage you to send them. I'll just move to the next slide and give some people some time if they do want to provide another some more feedback or ask another question. But in the meantime, we'll be launching a quick poll to gather your feedback on today's webinar. We do this for every webinar, and this just gives us a good understanding of how helpful it was and ways that we can improve. So I will launch the poll now, and we appreciate your participation. And I'll launch it for 1 minute and see if there's any more questions after, and then we'll move to our final slide of how to submit feedback. Okay, thanks everyone for participating in that. We don't have any more questions, so I think it's safe to move forward, please. Okay, so thank you again to everyone who did participate and submit feedback today and just joined in general to hear the webinar. So if you have additional feedback, please feel free to email it to consultations@rpra.ca by end of day December 14th. So we have the questions on the slide here that we asked during the presentation, but we're open to hearing additional feedback as well. So to review the procedure, it's already on our website. So you can use this link to read that. And the slides as well as the webinar recording will be posted later today. So thanks again for joining us, and we hope you have a great rest of your day.